Yo, 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 and yo. What's good with y'all boys, man? YouTube, finally. I was telling my Telegram this the other day. Like, I ain't made a video for y'all in a minute. But we're going to go over one today. In this video, we're just going to go over the whole day trading strategy. Just a little refresher. But before I get into that, I want y'all to look at this, bro. Today is Memorial Day. And I decided not to trade because I didn't think price action was going to be even worth trading. But I be forgetting that I trade FOREX. So it's not just, you know what I'm saying, US dollar related, right? This price action for London session was low-key beautiful, right? And this technically my strategy played out. Let's see if we got an SMT in this real quick. There was an SMT. GBP did not come down to these 8 session lows, where Euro USD did. So not only did we get our liquidity sweep, let me delete shorty. Right, so we got our liquidity sweep. We got the SMT. Right, because GBP USD did not come down to these 8 session lows, but Euro USD did. Boom, liquidity sweep, SMT. Now y'all know from there, we're looking for inverse fair value gaps, break of structure, which I go down to the 1 minute time frame for break of structure. But it is what it is. I don't feel like doing that right now. Inverse fair value gap, which me personally, I probably would have entered on this candlestick right here, or at least the pullback of it, because I would have anticipated that that would have been the inverse fair value gap. I'm not even gonna lie to you. So I would have entered right there, or I would have scaled down to the 1 minute time frame and found a quicker fair value gap to enter off of. But like I said, we got the liquidity sweep, we got the SMT, we got the inverse fair value gap. The only thing that we didn't get on the 5 minute time frame at least is a 5 minute bullish fair value gap. We got that right here, but you entered too late at that point to catch these 8 session highs, at least in my opinion. But it is what it is. I didn't take this trade obviously because I didn't trade, because I thought price action wasn't going to be that great. But that just goes to show that the price action wasn't that bad. But like I said, we're going to get into the strategy. That was the strategy right there in real time, at least for an actual session. But I'm going to go ahead and, you know what I'm saying, break the strategy down for y'all within each confluences. And we're going to start with liquidity sweeps, because that is the bread and butter. Without liquidity sweeps, I don't have a strategy or a setup, right? So let's say if we got a high, higher low, higher high, higher low, right? And let's say if price just comes and make a high, but we haven't made a higher high or, you know what I'm saying, a higher low. At this point right here, I'm looking for 1 to 2 things to happen. Let's say if my session opens right here, right? I'm either looking for a price to come down, take out these lows, and then continue higher. Or feel me? Hold on. Bear with me, bear with me. So cool. That pink line is the second option. So like I said, if my session opening here, I'm either wanting price to come down, sweep those lows and move up, or I'm waiting for price to come up, sweep these highs and move down, right? And it's vice versa to the downside. If I flip this upside down, I'm gonna wait for a price to sweep some lows, then move up, sweep some highs and move up, right? That is a liquidity sweep right there. It is sweeping unchecked highs or unchecked lows and having a reversal point from there. So instead of us creating that higher high right here and creating a higher low and continuing higher, we create a higher high, but we reverse that. Or instead of us creating this, creating this lower high, shift the structure, we just swept these lows and moved up. right? And that's where a lot of people get stopped out at, because they see us shift the structure. They think, oh, we're now going to be selling, so let me enter a sell position, and you get stopped out because that's just a liquidity sweep. Or vice versa to the upside, you think we're going to create a higher high, then another higher low, then keep going up when we just swept this high to then reverse. But that's liquidity sweeps. We're going to go with fair value gaps next because that's easier, and it's just a simple three candlestick pattern, right? If it's a bullish fair value gap, it'll take 3 green candlesticks for you, unless you change your colors. 3 up candlesticks. It's the close of the first to the open of the third, because y'all know bullish candlesticks, green candlesticks, they open at the bottom, close at the top. Bearish fair value gaps, bearish candlesticks, they open at the top, close at the bottom. So I'm gonna draw them both out. 3 candlestick pattern. The gap again, if it's a bullish one, the close of the first to the open of the third. If it's a bearish one, close of the first to the open of the third. Like I said, bearish fair value gaps, red candlesticks, open at the top, close at the bottom. Open at the top, close at the bottom. Right? Open at the bottom, close at the top. Cool. The gap is the gap between the first and the third candlestick. Like that. So the fair value gap is in here. Right? Even if candlesticks have wicks, because they most likely will. Boom. Let's say if one candlestick has a wick and the other one doesn't. Bear with me here. I'm just going to take it from the wick to the body. Right? Same thing if it was a bullish fair value gap. Right? Take it from wick to body. And if they both have wicks, obviously you picking up what I'm putting down from here, you take it from wick to wick. Right? Now let's say if we're about to inverse the fair value gap. So if we get a candlestick in the inside of the box. Cool. As long as price closes in this range, we are good to go. The fair value gap is still valid. It doesn't matter if price comes way the fuck down here, way the fuck back up there. As long as we close in the gap, the fair value gap has no longer been, it's still valid, right? But the moment we close below that for a bullish fair value gap, dunzo bunzo. Fair value gap is no longer valid. And it's the same thing for over here, right? As long as we close within the gap, we good. But the moment we get a candlestick closure above that bearish fair value gap, that fair value gap is no longer valid, right? That's it for fair value gaps. We'll go over SMTs real quick. SMTs kind of look like liquidity sweeps, depending on which pair you're watching, right? So SMT is when 2 correlating pairs are moving at the same, but one of them sweeps a pair of highs or a pair of lows, and the other one does not. So let's say if this is GBP USD, we didn't come up to these highs right here, but we moved down, reverse from that point, right? And let's say if this is Euro USD. Let's say if price comes above that high and reverses. That is a SMT. GBP USD did not come up to these highs, but Euro USD did. So this is why I use SMTs, because SMTs can be correlated with my liquidity sweeps. Because on Euro USD, this just looks like a liquidity sweep. But if I'm looking at GBP USD as well, I notice, oh, they didn't sweep those highs. So boom, I got a liquidity sweep and an SMT. Now I just need my reversal confluences. Inverse fair value gaps, which is what I just showed you, and breaker structure. Breaker structure is literally this right here. So if we're in an uptrend, higher high, higher low, higher high, higher low, we didn't create a higher high, but we broke below the low. So this price action right here is bearish because we just shifted below the last higher low, right? And let's say if we were already in a downtrend and we want to shift the structure to the upside, so boom, we come down, lower low, right? Lower high, lower low, lower high. For us to shift structure to the upside, we would need to come back down below this low. Well, that's a liquidity sweep, I'm tripping. All we need for a shift of structure is a closure above the last high, right? Lower low, lower high, lower low. Price comes up, takes out the last high, lower high, shift the structure to the upside. Makes sense? Shift structure is easy. It's just when price breaks above the last lower high or lower low or higher high or higher low, whichever one. But you can't shift the structure again. Like if we're already in an uptrend, you can't shift structures back to the upside, right? Unless we shift structure to the downside and then back to the upside, right? And vice versa for the downside. You can't shift structure to the downside if we're already in a downtrend. Feel me? But that's really it as far as confluences go. I went over liquidity sweeps, simple, fair value gaps, SMTs, I already went over fair value gaps, break of structure, right? That's really all I use. Liquidity sweeps, SMTs, fair value gaps in general, also inverse fair value gaps, and a break of structure, right? You couple all of that in together, and this is what you get. Right here. I don't really have to go search for an example because hell, London session today played out my strategy to perfection. I just didn't trade because it's Memorial Day. Feel me? And it's technically a U.S. bank holiday. So we got our liquidity sweep right here. We had these 8 session lows, got swept by London session lows, right? It's an SMT because GBP USD did not come down to these 8 session lows. We got an inverse fair value gap. And on a 1 minute time frame, you'll get your breaker structure, and you could get a faster fair value gap if you don't want to wait for the 5 minute fair value gap to form. And that's really all I got for y'all. Like I said, when you targeting unchecked highs or unchecked lows, if we sweep the lows, you might want to target the highs. If we sweep some highs, you might want to target the lows. So in this scenario, my stop loss would be just underneath these lows. TP would be either these 8 session highs or these highs right here, whichever one you felt, you know what I'm saying, when you wanted to get hit. It doesn't really matter. They both would have got hit regardless. And that's all I really got for y'all, man. Hopefully y'all enjoyed this video. Hopefully y'all are being profitable. And your strategy doesn't matter to being profitable, right? It's just a you thing. I'm just here to refresh the strategy for you so you're not making mistakes that are hindering you more than you are already hindering yourself. But again, that's all I got for y'all. Y'all boys stay motivated. Y'all stay blessed. I'm going to catch y'all in the next video.